Welcome to Part 2 of Calculating Assets 101. Now let's look at that hypothetical certification that I was talking about earlier. And what I've done for the purpose of this webcast is to show only a portion of the forms so that you can see more detail. The Watsons are applying for a unit and have several types of assets. According to the REA, they have checking and savings with estimated balances of $1,500 and $2,500, a money market account with a balance of $45,000, and two CDs valued at $5,000 and $10,000, for a total of $15,000. Since their total household assets exceed $5,000, we'll need to get third-party verification on all of the assets. How do we determine the value of the assets and what the income will be? The first step is to complete the deposit verification form with the Watsons at their interview. We have entered the amounts that the Watsons indicated on their REAs and had Al sign where indicated. We can do this because they have a joint account. If they did not have a joint account, we would need to get separate deposit verification forms for each person. The next step is to mail or fax this form to his bank for proper third-party verification. As you see, the amounts that Sally Smith has verified are slightly different from what Al had estimated. No problem. That happens all the time. The resident's guess is fine. We're only looking for estimation. The bank will give us the actual information. So now that we have the actual amounts of their assets and the interest rate, we need to determine what the actual income from their assets is, then compare that to the 2% imputed amount. Here we have a portion of page 3 of the Watsons eligibility certification. This will help us calculate their asset income. We simply enter the information, the type of asset, interest rate, and current balance, then multiply that balance by the interest rate to determine the actual income. The fees to convert to cash column is determined by subtracting a percentage of each asset, then entering the cash value of each into the last column on the right. You should contact the bank or check their website for any possible fees or penalties for early withdrawal. The totals are automatically calculated in boxes X and Y at the bottom, then transferred to page 1 of the eligibility certification. We can see here on the first page of the EC that the Watsons' actual income from assets is $2,942.88. The cash value of all of their assets is $54,247.50, and the imputed amount of their assets, remember that 2% amount, is $1,084.95. With a difference of nearly $2,000 between the actual and imputed amounts, neglecting to make this determination could result in an overqualified household, so be careful and double-check your work. It's always a good idea to have a second set of eyes go over certifications too. Now to finish the eligibility certification, we enter the actual asset income on line F, and remember to add this amount to their total income when determining qualification. Here's another hypothetical certification for the Rosewood Apartments, the residents Tom Anderson and Brett Gibson. Notice that this is a recertification with an original certification date of May 1st, 2005. Here is page 3 of Tom's REA, showing that he has $1,100 in a checking account and $500 in a savings account. The lower portion of page 3 shows that he has $3,800 in a 401k. Page 3 of Brett's REA shows that he has $1,800 in a checking account. He didn't show any other assets on his REA. So with the total household assets exceeding $5,000, all of these assets will need to be verified. Let's start with Tom's. Here's the top portion of Tom's deposit verification request, showing that his accounts are held at Bank of America. His estimated checking and savings balances are $1,100 and $500. Now we'll send this to Bank of America for verification. Here we see the bottom portion of Tom's deposit verification request returned from the bank. The current balance of his checking account is $1,115, and the average balance for the previous 6 months, the amount that we'll use for the certification, is $1,233. The interest rate for his checking account is 0. The current balance of his savings account is $550 with an interest rate of 0.25%. we've completed a second deposit verification request for Tom Anderson's 401k account. This is held at the Boeing Employees Credit Union, and we've addressed it to the accounts manager, Stephen Alder. And here we see the bottom portion as returned from the Boeing Employees Credit Union, showing the current balance of $3,800. The deposit verification request indicates that his 401k is earning 0% interest rate. Here's the top portion of Brett's deposit verification request. His checking account is also held at Bank of America. And here's the bottom portion of Brett's deposit verification request returned from the bank. We see the current balance of his checking account, $1,558, and the average balance for the previous 6 months, again the amount that we'll use for the certification, $1,927. Here we have the asset calculation portion found on page 3 of Tom and Brett's eligibility certification. Again, this page will help us calculate their asset income. Enter their names in the left column, the type of asset, interest rate, and current balance. And remember, for the checking accounts, that equates to the average balance for the previous 6 months. Then multiply that balance by the interest rate to determine the actual income. Remember that the fees to convert to cash column is determined by subtracting a percentage of each asset, then entering the cash value of each into the last column on the right. Always contact the bank or check their website for any possible fees or penalties for early withdrawal. The totals are automatically calculated in boxes X and Y at the bottom, then transferred to the first page. So here we have page 1 of Tom and Brett's eligibility certification. Line B shows that their actual asset income is $137.50. The cash value of all assets, $6,370. Multiply that by the imputed 2%, and we get $127.40. So the amount that we're going to enter onto line F would be the greater of line B or E. In this case, it would be line B, actual income, $137.50. Remember to add this amount to the household annual gross income and total those amounts on line G. I hope this webcast has helped you to understand how to calculate assets for affordable housing programs. If you have any specific questions, you can always contact your compliance officer by phone or email, or you can send an email to the Compliance and Preservation Division at askusco@wshfc.org.